Hi, my name's Darren. I'm going to be looking after you for the next 10 minutes as we walk you through what our students were looking at during the month of May with the US dollar Japanese yen pairing. Firstly, our disclaimer. Okay, this was the setup we were looking at, and for us, the 6th of May is one of our seasonal dates in the year that we can be looking for turns. Me personally, I had decided that this particular market didn't turn normally on this seasonal date, so I missed the initial push out of this turn, but some of our students were right on top of it, and I'll show you how. Just wanted to note here that these tops here, if you want to call them double tops, we had plenty of reasons for those tops. We're looking to take some long trades out of this turn as long as we can take profit before we reach this area of resistance at the top there. Okay, so that will be our guide throughout the month of May, that we don't try and sort of force the market up beyond this level. Okay, so out of that low there, this was our first trade, our first opportunity. And like I said, I missed this one because I didn't think the market would turn on the date, on this particular date. But a lot of our students were on top of that. This is their market, some of them, and they were right on it. So they would then go, because these bars were so large, it's quite difficult to use a daily chart to get into the market. Your risk would be a long way away. Your stop loss would be too far away, and then your reward to risk ratio would be very small. So they've dropped down to a 4-hour chart, and we've watched the market work its way back up and then make what we call a first higher swing bottom. And as that gets broken on the 4-hour chart, a lot of our students were long at that stage with their stop loss underneath, which obviously being intraday means you can get stopped out, but we find the 4-hour chart quite strong and use it quite often when the daily chart won't help us. And then we very quickly go back to the daily chart for our profit target once we're set and into the trade and we've locked in our stop loss. Okay, so yeah, quite a small risk there. If we look at the reward, will be 260 ticks, and that will come in before our area of resistance at the top there. But the risk is only 41 ticks being intraday. So we've got a 6-to-1 reward to risk ratio. We're just going to talk about a $5,000 account. I'm not going to add profits to that as we go. Let's just keep that flat. Then the risk is $250 each time. But obviously in real life, that account would grow, and so would the risk, and so would the reward. So as you may have worked out already, there's a $1,500 reward there. Okay, and there are just 7 trading days. Opportunity number 2 was an opener's entry. This is a technique from David Bowden that we've been working really hard with in the last 6 months to perfect. And here we have a situation where we have what we call a long the opener's entry. I actually waited until we broke above this 4-hour bar here. Now you would have, some students would have their stop loss underneath this open, which is fine. I like to just pop my stop loss under the previous swing just for extra safety. Just means there's a slightly bigger risk, but it just keeps me out of trouble, I find, a lot of the time. And again, you know, because it's a 4-hour chart and we're getting in nice and early in the day, as you can see, our risk is very small. So that was trade 2. 355 ticks for the reward. Okay, 36 ticks, almost a 10-to-1 reward to risk ratio there, but we'll take 9-to-1 any day of the week. That brought in $2,250. I was now part of the action and joining in with the guys, so I was happy. Here we're back to a daily chart. As you can see, there's our area of resistance up the top there. But this time we're just using an outside bar. We call this an outside bar. As it eclipses the previous bar there, we can enter. We're going with the flow. We know the trend has turned back up. We've broken these previous swing tops here, and our stop loss is underneath this strong up bar here, and there's our target up top, well before the area of resistance. So there's us using a 1-day chart. Now we like to analyze the 1-day, the weekly, the monthly charts. And, most of the time we use the daily chart for our trading. Sometimes we'll dip into the intraday charts to get a closer entry, or if these bars are too big to use, but we certainly don't live intraday staring at charts every minute of the day. All right, so 237 there for the reward, 53 the risk. That's a 4-to-1. Happy with that. $1,000, 16 days, trade 3 in May. Okay. And here we go again. This is just a regular, we would call that a vanilla ABC trade. Higher swing bottoms, higher swing tops. As that trend is confirmed as continuing upwards, we can enter as this red bar gets broken. Stop loss below. Nice and simple. Look at the trend. Market going well, and again profit target before the top of this huge outside bar here and our resistance. So we're happy with that as long as we can keep getting to a milestone before we get to this level. We're happy to take these trades as long as it's within our limits, our entry limits, which is normally 33%. Then we can take the trade. So trade number 4, 125 ticks, 61. It's a 2-to-1. We'll take that. This is a little mini campaign for this little run on the Japanese yen up against the US dollar. And there's another $500 in the bank. And like you see, it's taken 13 days, which you could argue has taken too long for that reward. But it's part of a bigger campaign. So we're just adding bricks to the wall. Trade 5, we're back intraday again. We can see a setup, but the daily chart's not allowing us into the market, so we can drop down into our 4-hour chart. We can get a stop above here. We're using this open. We've fallen away. We couldn't break any lower. The daily chart was telling us to look for another long trade. We can then get in as we eclipse this bar here. Stop loss underneath. Nice tiny risk there, which is all the while because we are getting closer and closer to our resistance area. So our rewards are going to be smaller as we get nearer to that area, and our risk we need to keep small as well. So 133 ticks, they're getting smaller and smaller, but only 16 ticks risk. So we've got an 8-to-1 there for our reward to risk ratio. There's $2,000 in the bank, and that's only taken 18 trading days that time. So number 6 and our last trade, as you can see, we're fast approaching that 160 level. It's just another ABC trade. Nice small bar there to allow us to get in on the breaking of the top, and stop loss below. We're with the trend. We've got a profit target in mind, okay, before that area of trouble, if you like. So we're happy to take that. 106 ticks. Market's starting to squeeze up as we get nearer to the top. 31 ticks risk, so a 3-to-1. Okay, beautiful. Take a 3-to-1 any day of the week. $750 in, and only 6 trading days. So good business there. Just add in to the campaign as we go. So there's just an overview of May. I've put the dates in there of the particular turns that gave us the possible setups. We didn't necessarily get in on that day. Quite often it will be the following day. I just thought I'd put them dates in there for you. I've noted the 3rd of June here, which was another opportunity for us. Just we couldn't get in within our entry limits to keep us safe. And we couldn't use the intraday charts either. They didn't help much on that occasion. Some big bars around that area of the market. Could have got a repeat, 100% repeat, to fall in with these milestones here and the clusters that are forming. And again, we'd be underneath our resistance. But personally, and I know a lot of our students decided not to take or be part of that trade because of the entry limits being broken. And we've got, David Bowden's given us rules to use and to refine that keeps us safe and out of the market if we see trouble or there isn't enough reward to risk ratio involved. And then I've just put in some lines that were our profit targets for each of the 6 trades. And as you can see, it took a while to get there. The market started going sideways towards the end, maybe a sign that it's starting to mushroom over, we shall see. But in the end, all of our targets were hit at this part into June. Okay, so, all the hard work was done in May and the rewards were found early June and just before we get to that point of resistance. So just a summary there, each trade, each time, and looking good. Not often we are 6 profits out of 6 trades. Quite often there's a break even in there or a minor loss, but our ratio means if one of those was a loss, it would be $250. And as you can see, the rewards are much higher than that. There's our ratios, and that's how long it took for each trade. Now, some people are intraday traders and waiting 13 days for their trade to finish is just too long, but we just like to progress safely and strongly and keep connecting our gains and our profits as we go. So 6 wins there, total of $8,000 for the month of May on that particular market. Like I said, no break evens, no losses there. So happy days. If you'd like to learn how you can replicate these trades, follow the link below to find out more about our Active Trader program, which will teach you how to consistently and safely build your trading account. Often, as you saw, with 10 to 1 reward to risk trades.